The last 13 days have been nothing short of breathtaking, with total trading volume of Bitcoin ETFs reaching over $4.5 billion. It is indisputable that heavyweights like BlackRock, Fidelity, and other institutions are actively buying Bitcoin. But what's really behind this unprecedented buying frenzy? The answer could change everything. When looking at the observed inflows, something unusual stands out. The amount of accumulation is clearly visible, as in the last 2 days, net inflows of hundreds of millions, almost $1 billion, have been observed. These ETFs have absorbed enormous sums of money. They were launched at the beginning of January, recorded significant inflows in March and April, and again at the launch. But why have the last 13 days been so exceptional, with inflows on 12 out of 13 days? Total inflows are now just under $5 billion, about $4.74 billion, over the last 13 trading days. Part of this is momentum trading as the price rises, while other factors are related to the current market dynamics. But what happens if this trend continues? Could we be on the brink of a financial paradigm shift? The answer may lie in the increasing institutional adoption of Bitcoin, strengthening confidence in the cryptocurrency and attracting new investors. Interestingly, Ethereum ETFs are not seeing the same level of demand. Bitcoin stands out, as institutional demand for Ethereum via ETFs remains subdued. While Bitcoin ETFs have attracted $23 billion since January, Ethereum ETFs, which were launched in July, have seen a net outflow of $500 million. Why is Ethereum less favored by investors? This discrepancy is partly because Ethereum is considered more complex. Bitcoin is simpler, often compared to digital gold, a store of value and a hedge against currency devaluation. Ethereum, on the other hand, is perceived differently, whether as a tokenization platform, digital app platform, or something else. Investors seem less willing to fully understand Ethereum's multifaceted use cases, while Bitcoin is seen as unique. But could this perception change in the future and give Ethereum a boost? If investors begin to recognize Ethereum's diverse applications, it could lead to increasing demand and growth similar to Bitcoin. Let's shift focus to the broader economy. U.S. Treasury yields are rising, indicating a lack of confidence in the short-term outlook of the economy. Smart money is moving into bonds, while Bitcoin and gold are also gaining popularity. Regardless of the political course taken, no one has yet proposed a plan to tackle the U.S.'s $35 trillion debt. Without a strategy to manage this debt, assets like Bitcoin and gold are expected to rise. Is it possible that these financial uncertainties are paving the way for alternative investments? Indeed, investors might increasingly invest in cryptocurrencies and precious metals to hedge against economic instability. Howard Lutnick, CEO of Cantor Fitzgerald, has already built up hundreds of millions in Bitcoin exposure. He plans to increase this to billions and buy on every dip. Lutnick envisions Cantor Fitzgerald leading the integration of Bitcoin into traditional finance and possibly paving the way for widespread adoption. Could this be the final breakthrough for Bitcoin? His strategy signals growing confidence among major financial players in the future of Bitcoin. Institutional adoption is the biggest catalyst for Bitcoin's growth. Recent ETF inflows reached $800 million in a single day, underscoring the momentum. With limited supply, prices are likely to rise. But how high can the price really go? And what does this mean for the average investor? If demand continues to exceed supply, we could see historic highs, bringing both opportunities and risks for investors. In other news, Binance has continued its global expansion and overcome new regulatory hurdles. What does this mean for the future of cryptocurrencies? And could there be more surprises ahead? Developments suggest that the crypto market is becoming more mature and resilient, promising exciting times for all involved. The coming months could be decisive. Are you ready for the possible changes in the financial market? It's time to stay informed and make strategic decisions for your financial future.